Here's a detailed summary of the Eli Lilly Q1 2026 earnings call transcript, designed for clear, spoken delivery. Good morning, everyone, and thank you for joining us for Eli Lilly and Company's first quarter 2026 earnings call. I'm Mike Zapar, Senior Vice President of Investor Relations, and I'm joined today by Lilly's Chair and CEO, Dave Ricks, and Chief Financial Officer, Lucas Monarce, along with other members of our leadership team. We've had a very strong start to 2026. During the quarter, we delivered robust revenue growth, advanced our pipeline across all 4 therapeutic areas, announced multiple business development transactions, and continued to invest in our future growth. Key financial metrics and performance. For the first quarter of 2026, Lilly reported impressive financial results. Revenue grew a significant 56% compared to the first quarter of 2025. This growth was primarily driven by our key products, including Zepbound and Mounjaro, which together contributed over $7 billion in growth. Our immunology, oncology, and neuroscience portfolios also showed substantial momentum, collectively growing by 160% year-over-year. Gross margin as a percentage of revenue was 82.6%, a slight decrease of approximately 1 percentage point from the prior year, primarily due to lower net prices. Marketing, selling, and administrative expenses increased by 19% as we continue to invest in promotional activities for our ongoing and upcoming product launches. Research and development expenses rose by 28%, reflecting our continued investment in our robust pipeline, which includes 42 active Phase 3 programs. Our non-GAAP performance margin reached 50%, an increase of roughly 7 percentage points from Q1 2025, driven by our strong revenue growth. On a non-GAAP basis, earnings per share was $8.55, a significant increase from $3.34 in the first quarter of 2025. Management's forecasts and guidance for future quarters. Looking ahead, we are raising our full-year 2026 financial guidance. We now expect full-year revenue to be between $82 billion and $85 billion, an increase of $2 billion at both the top and bottom of our previous range. The midpoint of this new range represents approximately 28% growth compared to 2025. We anticipate that price will continue to be a headwind in the low to mid-teens for the full year. Our non-GAAP performance margin is now expected to be between 47% and 48.5%, driven by higher revenue. We also expect non-GAAP earnings per share to be between $35.50 and $37, an increase of $2 to both the top and bottom of our previous guidance. Highlights of the quarter. The first quarter was marked by several significant achievements: FDA approval and launch of Foundayo. Orforglipron. A major highlight was the U.S. FDA approval of Foundayo, an oral GLP-1 agonist for weight management. This novel pill offers convenience without food or water restrictions, and is the first new incretin medicine launch with obesity as its primary indication. The launch is progressing well with broad distribution, strong consumer awareness efforts underway, and significant focus on educating healthcare professionals and building access. Regulatory reviews are ongoing in over 40 countries, and we plan to submit Foundayo for type 2 diabetes in the U.S. later this quarter, supported by positive Phase 3 data demonstrating cardiovascular safety. Strong performance of key products. Zepbound and Mounjaro continue to be significant growth drivers, with global revenue reaching $12.8 billion combined in Q1. We've seen strong volume growth internationally, with Mounjaro achieving rapid market share gains in regions like Latin America and Asia, and solid momentum in Japan and China following reimbursement inclusion. Pipeline advancements. We achieved several key pipeline milestones, including positive Phase 3 data for pirtobrutinib in CLL, Aegis, ixekizumab, in pediatric atopic dermatitis and retatrutide in type 2 diabetes. We also initiated new Phase 3 programs for eloralintide, ceftibart, mipitecin, and brenipatide. Strategic business development. Consistent with our capital allocation strategy, we announced agreements to acquire multiple companies with promising clinical stage programs, including Orna Therapeutics for autoimmune diseases, Centessa Pharmaceuticals for neurologic conditions, Colonia Therapeutics for cancer, and Ajax Therapeutics for blood cancers. Enhanced access to obesity medications. We launched Lilly Employer Connect, an innovative platform for employers to offer obesity management medicines, and we were encouraged by the CMS announcement extending the Medicare GLP-1 Bridge program through December 2027, providing access to obesity medicines for Medicare beneficiaries with a capped out-of-pocket cost. Lowlights/challenges. While the quarter was overwhelmingly positive, we did note a 7% price decline in U.S. revenue, primarily due to the impact of negotiated outcomes with governments and direct-to-patient pricing adjustments. Excluding a one-time adjustment to rebate and discount estimates, U.S. price would have declined 10%. Additionally, the loss of Medicaid access in certain states had a negative impact on Zepbound prescription growth in the high single digits. Most important statements from management. Dave Ricks, Chair and CEO. Dave Ricks highlighted the strong start to 2026, emphasizing the robust revenue growth, pipeline advancements, and strategic business development. He underscored the significance of the Foundayo approval, stating, "Foundayo is a new molecule, a new modality for agonizing GLP-1, and it is a new brand. This is the first time a new incretin medicine has been launched with obesity as its indication first." Ricks also spoke about the unique pricing dynamics in the obesity market, noting, "Pretty much every time we reduce pricing, we see a pretty large expansion." He believes this market operates differently than traditional pharmaceutical categories, which is good news for Lilly. Lucas Montarce, Chief Financial Officer. Lucas Montarce provided a detailed financial overview, confirming the strong revenue growth and improved non-GAAP earnings per share. He explained the drivers of gross margin changes and increased operating expenses, stating, "Marketing, selling and administrative expenses increased 19% as we continue to invest in promotional activities to support ongoing and planned new product launches." He also reiterated the updated full-year guidance, noting that the uplift was driven by the strength of the entire portfolio, rather than a material Foundayo contribution at this early stage. Significant risk factors. As outlined in our filings, actual results could differ materially due to various factors, including regulatory approvals and timelines, delays or failures to secure regulatory approvals for new drugs or indications, market competition, intense competition in our therapeutic areas, particularly in obesity and diabetes, pricing pressures and reimbursement challenges, ongoing negotiations with payers, government bodies, and the potential for unfavorable pricing environments, manufacturing and supply chain disruptions, ability to meet global demand for our products, especially for high-growth therapies, intellectual property challenges, patent expirations, and potential litigation, clinical trial outcomes, success or failure of ongoing and future clinical trials, economic and geopolitical factors. Broader economic conditions and global events can impact demand and operations. In summary, Eli Lilly delivered a powerful first quarter of 2026, exceeding expectations with strong revenue growth, significant pipeline progress, and strategic acquisitions. The launch of Foundayo represents a transformative moment for the company and the treatment of obesity. We are confident in our ability to deliver continued industry-leading growth and bring innovative medicines to patients worldwide. Thank you. We will now open the floor for questions.